Welcome to all of you, Shiksha 360, and today basically we will discuss ABM MCQ series for particular December 2022, November, December. This is basically MCQ set number 3. Clear? This is basically MCQ set number 3 or 4, I think. 3 we have already discussed. That is basically chapter number 3 from it belongs. Question number 58 to 76. Clear? Question number 58 to 76. So let's start our discussion. Question number 58 basically presents on your screens now. What it says that the effect of purchasing power or inflation on present value on important because. Clear? So what is the effect of purchasing power or inflation basically on the present value? As the inflation is increasing, clear? So we can say that what is the impact on that? Clear? What is the impact on that? So it increases the real value of cash flows received in the future. It reduces the real value of cash flows basically received in the future. It has no effect on the real value of cash flows received in the future. D option is none of these. Clear? Basically, D option is none of these. None of these. So what is the answer? Clear? The effect of purchasing power or inflation on present value is important because first one is it increases the real value of cash flows in the future. It decreases the real value of cash flows received in the future. Clear? Or no effect. Clear? We know that as the inflation is rising, it means that basically there is more money in the market. So if there are more money, there is, we can say that basically leads to more demand. Please understand. Like that's why basically RBI increases the interest rate. Clear? Because in the month of May and June. Clear? Because due to high inflation. Clear? There is more money in the hands of the people. Clear? So it leads to more demand. It leads to rises in the price. Or rising in the price, or we can say that basically decrease in the purchase value. Clear? Or decrease in the real value. Decrease in the real value of cash flows. So option number B, the answer, that is it decreases or reduces the real value of cash flows received in the future. Clear? It reduces or decreases the real value of cash flows basically received in the future. Clear? What is the meaning of that? Please understand. Like basically earlier, basically 2 years back, if you are purchasing anything of rupees 20 per kg. Clear? Now due to the inflation, clear, that thing basically it is available rupees 50 per kg. Clear? So it reduces the real value of cash flows. Clear? Basically earlier basically we will receive in the 20 rupees. Now basically we will receive the same thing basically at rupees 50. So please tell fast. Now this question is clear to all of you. The effect of purchasing power or inflation basically on the present value is. Please tell fast. This type of question, if they will ask in the examination, we will see. It seems that very straightforward question. Clear? But they are asking very good things in the question. Please tell fast. Hope it is clear to all of you. Now move to the next question. Please answer the question. Under the money supply concept, the term narrow money includes which of the following? Clear? Under the money supply concept, the term narrow money, that is basically M1. There are 4 types of money. Basically, we have to discuss M1, M2, M3. Among that, the term narrow money includes which of the following? Clear? The term narrow money includes which of the following? First one is currency with the public plus other deposits with RBI. Second one is currency with the public plus demand deposits with the banks or banking system plus other deposits with RBI. Currency with the public plus bank demand deposits. Currency with the public plus bank deposits plus post office deposit. Clear? So the correct answer here is to option number B, that is M1 is equal to, or narrow money basically it is equal to currency with the public plus demand deposits with the banks plus other deposits with the RBI. Clear? Now basically we have to discuss basically what is M2. M2 is simply M1 plus saving deposit. M2 is equal to M1 plus saving deposit of what? Of post office saving banks. Clear? Saving deposit of what? Of post office saving banks. Third one is M3. M3 it is what? M3 is equal to M1 plus time deposit with the banking system. Clear? M3 is equal to M1 plus time deposit with the banking system. Clear? Time deposit with the banking system. M3 is equal to M1 plus time deposit with the banking system. Last one here is to be M4. M4 is equal to M3 plus all deposits. Clear? M3 plus all deposits with the post office saving banks. Clear? With the post office saving banks. Clear? M4 is equal to M3 plus all deposits with the post office system saving banks. Clear? This one is M2, M3, M4. Now move to the next question. Question number 16. Which of the following best defines cost push inflation? Clear? There are basically two types of inflation. First one is the cost push inflation. Second one is the demand pull inflation. Clear? Second one is the cost push demand pull. So now let's discuss one by one what is the reason behind the cost push inflation. First one is price rising due to an excessive growth in aggregate spending. Clear? Basically price rising due to an excessive growth in aggregate spending. Second one is price rising due to an increase in the price of a firm's input. Third one is price rising due to an over rapid growth in the money supply. Fourth one is price falling over a period of time. Correct? Fourth one is price falling over a period of time. Clear? Price falling over a period of time. Clear? So which of the following basically best defines the cost push inflation? So cost push inflation, basically what is that? Basically it is due to the cost push inflation. Basically it is due to the increase in the cost of production. Clear? Basically it is due to the increase in the cost of production of important goods and materials. Clear? That is basically manufacturing. We can say that manufacturing cost is increased. Clear? Manufacturing cost is increased. That leads to the increase in the cost. Clear? That leads to the increase in the cost. Option number B is the answer. That is price rising due to the increase in the price of the firm's input. Clear? Price rising basically due to the increase in the price of the firm's input. So option number B is the correct answer here. Clear? Option number B is the correct answer here. Now move to the next question. Question number 61. This is a simple numerical based type of question. So here what they have given, that is currency with the public, that is 1 lakh. Demand deposit with the banking system 2 lakh. Other deposits with the RBI, that is 22 lakh. Saving deposit of post office saving bank 40,000. Time deposit with the banking system 2 lakh. And all deposit of post office saving of post office banking system, including 40,000 of the NSC total. Clear? Including 40,000 of the NSC total. Clear? Basically we can say that if we eliminate NSC basically out of that, so basically it becomes 60,000. Clear? It becomes 60,000. Clear? It becomes 60,000. Clear? Now what they are asking? Calculate M4. Clear? Now just simple they are asking basically calculate M4. So how we can calculate M4? Clear? For M4, first of all we have to know that this one is M4. First of all basically we have to calculate M3. Clear? M3 is equal to what one? M1 plus time deposit with the banking system. Clear? Time deposit with the banking system. Clear? For M3, first of all, basically we have to calculate M1 plus time deposit with the banking system. It means that first of all, basically we have to calculate M1. So M1 basically what is? Currency with the public, that is 1 lakh. Plus demand deposit with the banking system, that is 2 lakh. Plus last one, other deposit with the RBI, that is 2 lakh. So M1 here is equal to 5 lakh. Okay, M1 here is equal to 5 lakh. Next one is M3. We have to calculate M3. M3 is equal to M1 plus time deposit with the banking system, that is 2 lakh also. So 5 lakh that is 7 lakh. So we know that our answer is more than 7 lakh. Clear? So this one is not our answer. This one is not our answer. Clear? Because in M4, basically M3 plus all deposit with the post office banking system excluding NSE. Clear? Excluding NSE. That is basically it becomes 60,000 plus 60,000. So 7 lakh plus 60,000. That is 7 lakh 60,000. So option number C is the answer here. Clear? Option number C is the answer here. Okay. So sometimes basically they will ask this type of question also. At that time, basically what you have to understand that you just have to remember the formula. Clear? You just have to remember the formula, rest everything will be solved. Now move to the next question. Same question. Now they are asking some different thing. Calculate the broad money. Clear? Now they are asking basically calculate the broad money, that is M3, which we have already calculated. Clear? M3 basically how much we have calculated, that is 7 lakh. Clear? M3 basically we have already calculated, that is 7 lakh. So option number B is the answer, that is 7 lakh. Clear? So please remember all these things while solving the question. Clear? Like what is M1, M2, M3, M4. Clear? Definitely you will get at least 3 mark case study or 1 mark question from that. Clear? At least 3 mark case study, otherwise 1 or 2 mark question basically from that. Clear? 1 question or 2 questions. Clear? From this chapter, and very, very easy questions. Just you have to understand the thing. Now move to the next question. Which one of the following is the difference between the broad money and the narrow money? Clear? Which one of the following basically it is the difference between the broad money and the narrow money? Clear? That is M1, M3. So M3 minus M1 basically we have to find out. M3 minus M1 basically we have to find out, that is equal to the time deposit. That is basically is equal to the time deposit with the banking system. Clear? Time deposit with the banking system. So what is the correct answer basically for that? Option number B is the correct answer, that is time deposit with the banking system. Clear? They are asking basically which one of the following is the difference between the narrow money and the broad money, that is M1 and M3. Clear? M3 minus M1, that is equal to the time deposit with the banking system. Clear? Option number B is the answer here. Now move to the next question, question number 64. So here they are saying that basically suppose that the consumer price index, we have basically suppose that the consumer price index basically is equal to 177.1 in year 2001 and 179.9 basically in the year 2002. So the rate of inflation basically between 2 years thus equal to. Clear? The rate of inflation. Clear? So what is the rate of the inflation? Clear? Basically between these 2 years. Clear? So just we have to find that the rate of inflation is equal to of year 2002 minus of 2001 upon 2001 into 100. Clear? So what is the rate of the inflation in the year 2002? That is 179.9 minus 177.1 upon 177.1 into 100. This is the rate of the inflation. Clear? So this is the rate of the inflation. Now just we have to calculate 179.9 minus 177.1 divided by 177.1 into 100. That comes out to basically 1.58%. Clear? That comes out to basically 1.58%. Approximately option number A, that is 1.6%. Clear? Approximately option number A, that is 1.6%. Clear? So option number A is the correct answer. Now move to the next question, question number 65 here. So when we add post office saving banks, deposits of post office saving banks basically to the M1 plus deposit of or saving deposit of post office saving banks, we get which measure of money supply? Clear? Basically, we get which measure of money supply? Clear? So option number A is M1. Clear? This is definitely not the answer because we have to add something in that. Clear? We have to add something in that. So definitely it is not the answer. M4 not. M4 basically all deposits. M3 is basically that is term deposits. Clear? So the correct answer is to be M2. Clear? The correct answer is to be M2. That is option number D is the answer. That is none of these. Clear? That is none of these because we have to find out M2 here. Clear? We have to find out M2 here. Now move to the next question. One of the demand pull factors that create inflation in the India. Clear? Basically, one of the demand pull factors basically that creates inflation in India. Clear? Basically, that creates inflation in India. First one is the imposition of GST. Second one is basically rising deficit finance of the government. Third one is hoarding of the essential commodities. Option number D is none of the above. Clear? Option number D is none of the above. So this question, it is basically for the practice purpose for all of you. Clear? We will discuss this question in the next session. This question, it is for the practice for all of you. So please comment your answer in the comment section along with the reason. Clear? I will give you another question along with the reason basically why this only option. Clear? If you are giving option number B, then why is the only option? If you are giving option number C, then why? Along with the reason, or basically along with the reason, that is why your option is more appropriate basically with respect to the other. Clear? Why your option is more appropriate basically with respect to the other. Clear? So please give your reason along with that also. Clear? So that basically I am able to understand how you are attempting the question. Clear? How you are attempting the question. Okay, we'll discuss. Now move to the next question. Question number 67. Which of the following is a component of money supply? That is M2. Clear? Basically, which of the following is a component of money supply? Basically, that is M2. First option is saving deposits with the licensed banks, time deposits with the deposit taking companies, negotiable certificates of deposits held by the banks, or $1,000 gold coins. Clear? Or $1,000 gold coins issued by the government and held by the banks. Clear? $1,000 gold coins issued by the government and held by the banks. Clear? And held by the banks. Clear? So what is the correct answer in this question? Which of the following is a component of money supply? That is of M2. Clear? First option is the money deposits with the licensed banks, time deposits with the deposit taking companies, negotiable certificates. So the correct answer here is to be option number A. Clear? Option number A is the correct answer. That is saving deposits. Clear? That is saving the deposits. Now move to the next question. The aggregate demand curve. Clear? The aggregate demand curve is. The aggregate demand curve is basically a horizontal summation of market demand curves, a horizontal summation of firm demand curves, a simple aggregation of demand curves for the individual goods, not found by adding product demand curves horizontally or vertically. Clear? Not found by adding product demands curves horizontally or vertically. Clear? We know that basically the demand curve, that is, it is the relationship between the quantity demanded, that the price and the quantity demanded. So it is a horizontal summation? No. Horizontal summation of firm demand curves? Not. It is a simple aggregation of demand curves for the individual goods? Not. This is also not like that. Clear? Basically option number D, we can say that basically not found by adding product demand curves horizontally or vertically. Clear? Not found by adding product demands vertically or horizontally. Clear? So this is the simple, it is the relationship between the price and the quantity demanded. Clear? It is a simpler relationship between the price and the quantity demanded. Clear? So option number D, we can say that. Now move to the next question. Very important questions for the examination purpose now. Inflation is measured by the, inflation basically it is measured by the consumer price index, GDP deflator, current account, depreciation. Clear? So basically inflation is measured by the consumer price index, this one is correct or not? Consumer price index, basically this one is correct or not? Yes, this one is correct one. Clear, inflation is measured by the consumer price index. Second one is inflation is measured by the GDP deflator. Yes, this one is also correct one. Clear, inflation basically it is measured by the GDP deflator. Clear, third one is current account. Clear, if they are giving the full word, that is CAD. Clear, so we can think over that is the current account deficit. Clear, here they are not giving anything regarding that, so basically this one is not. Depreciation, it is also not. We can say that what inflation is measured by the depreciation. Clear, so we will get only option number 1 and 2, that is current price, consumer price index and the GDP deflator. Clear, so option number A is the answer, that is 1 and 2 only. Clear, so can anyone tell basically what is the formula of the GDP deflator? That is nominal GDP upon real GDP. Clear, GDP deflator basically it is equal to the nominal GDP upon real GDP. Okay, now move to the next question, question number 70. Very easy question. I think we have already discussed this question once again. Already discussed. In India, money supply M1 basically is equal to currency plus demand deposits plus other deposits, currency plus demand deposits plus term deposits, currency plus demand deposits plus term borrowings, or option number D is none of the above. Clear, or option number D is none of the above. Clear, so what is the correct answer? In India, basically money supply M1 basically it is equal to the currency plus demand deposits plus other deposits. Clear, so option number A is the answer. Clear, that is currency plus demand deposits plus other deposits. Clear, so option number A is the correct answer. Now move to the next question. CPI is published by, clear, basically CPI basically it is published by CFPI, Ministry of Commerce. Third one is basically RBI. Option number 4th is CSO. Clear, CSO basically stands for the Central Statistics Office. So CPI basically it is published by CFPI, Ministry of Commerce, RBI, or CSO. Clear, the correct answer is option number D, that is CSO, Central Statistics Office. Clear, Central Statistics Office. Clear, CPI is it is published by Central Statistics Office. Clear, so option number D is the correct answer here. Now move to the next question, question number 72. Which of the following best measures change in the price level of national product? Clear, which of the following best measures changes in the price level of the national product? Clear, basically at the national level. Clear, basically at the national level, basically which of the following basically best measures change in the price level of the national product? Clear, first one is the consumer price index, second one is the real interest rate, third one is the unemployment rate, fourth one is the GDP deflator. Clear, basically fourth one is the GDP deflator. Clear, so the correct answer here is to basically GDP deflator. Clear, because it measures basically with respect to the nominal GDP upon real GDP. Okay, so how many of you are understand basically what is nominal GDP and what is real GDP? Please tell fast what is nominal GDP and what is real GDP. How many of you have understand? Please reply that. Now move to the next question, question number 73. Clear, this type of question basically they mentioned in the book also, and this type of question I have already asked in the examination also. Clear, so term deposits are first one is paid on demand, second one is basically it is not paid on demand, third one is basically relatively less liquid than cash and demand deposits. Option number D is both B and C. Clear, option number D is basically both B and C. Clear, so what is the correct answer? Time deposits are paid on demand, not paid on demand, relatively less liquid than cash and demand deposit. Option number D is both B and C. Clear, so basically it is paid on demand. No, option number A is totally wrong. Not paid on demand, this one is correct one. Clear, relatively less liquid than the cash and demand deposit, this one is also true. Clear, so both B and C are true here, so option number D is the answer here. Clear, option number D is the answer here. Now move to the next question. Consumer price index. Clear, basically consumer price index basically it measures prices at which level? Wholesale level, retail level, producer level, or consumer level? Consumer price index measures prices at wholesale level, retail level, producer level, or consumer level. Clear? Earlier, basically, it is to be measured at the wholesale level. Now, presently, basically, it is to be measured at the retail level. Clear? Presently, basically, it is to be measured at the retail level. Clear? So, option number B is the answer. That is retail level. Now, move to the next question. Question number 75. Government uses which of the following index of inflation for the policy formation? Clear? Basically, government uses which of the following index of inflation for the policy formulation? Clear? So generally, basically, which index is to be used? First one is the wholesale price index. Second one is the consumer price index. Third one is the industrial production index. Fourth one is both A and C above. Clear? Both A and C above. So the correct answer here is to that is wholesale price index. Clear? The correct answer here is to be that is wholesale price index. Clear? So option number A is the correct answer. Clear? Option number A is the correct answer. Now move to the last question of our today discussion. A GDP deflator, basically less than 1 indicates that an economy has experienced. Clear? So GDP deflator less than 1, basically what it means that is nominal GDP upon a real GDP. What it means that? It means that basically real GDP is more than the nominal GDP. Clear? Basically it is more than the nominal GDP. Clear? Real GDP basically it is more than the nominal GDP. Basically what it means that? It means that the prices have been decreased. Clear? Basically it means that the prices have been decreased. Clear? Prices have been decreased. Clear? So if the prices has been decreased, that is basically leads to the deflation. Clear? That is basically leads to the deflation. Clear? That is basically leads to the deflation. That is basically if the real GDP basically it is more than the nominal GDP. Clear? It is more than the nominal GDP. Clear? So option number B is the answer here. Clear? Option number B is the answer here. So all the questions basically which I have discussed today, hope all of you are able to understand. And I request all of you please tell in the next session basically what is the difference between the nominal GDP and real GDP. Clear? In complete sense. Otherwise, basically I will discuss also. Clear? Please mention in the group if you are able to understand this one. Otherwise, basically we have to discuss. Okay. And this question which I have left for you, that is question number 66. Clear? Along with the reason. Rest, hope it is clear to all of you, all the questions which we have discussed today. So thanks to all of you for joining this session.